Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And it's another fun-filled day, and it's Happy to Hump Day, Wednesday. And we have the dollar index up on the screen. What else can we say about all that? Oil is lifting. Stock markets are in the green. Nothing major. What else can we say? Oh, did I say Bitcoin yet? Not counting the fact that the oil futures are lifting. Bitcoin is lifting. So we're seeing some nibbling away again. In other words, this is we're getting very close to the end of the first, or this is the third quarter, right? Almost ended. So we're getting ready to go into the fourth, and money has been trying to inch its way into this market. There's trillions of dollars on the sideline. We've talked about that over and over again. Some estimates as high as $5 trillion are sitting on the sidelines. Supposedly a good $2.7 trillion of it is in mergers and acquisitions, just waiting to find something to buy. Probably why that day when we mentioned U.S. Steel, the next day someone decided to pull the trigger. I guess they said, oh, there's a headline. Someone's saying buy steel. They stepped up and the stock leaped 50%. And that's a easy go-to. Old, strong industries like that when an economy gets going, it's a great place to be. A sip of my tea this morning. Okay, let's make sure that the sound is sounding right. Let's see, do I hear my sound? Yep, okay, good, I hear my sound, that's excellent. I see Robin's there. Hey, Robin, good morning to you. And then we're seeing here on, the dollar index, another high. We've broken through the 106s now. We're talking about like a 10-month high at this point. And, we're seeing the same thing in reverse with the euro and all the other pairs trades. We talked about that yesterday. And the end result is, government policies are slowing the market down. They're reaching for something safe, and they buy dollars. That's it. It's not magic. It's not magic. It's not magic. It's just not magic. It's a basic theme. As always, money likes to go to something that they can feel like they can survive in. Something real. And something that won't disappear on them. So, as you see there, we're showing you the new platform. It's also moving up. You can see on J4X 92.4, 90.2, 92.2, and then goes back to 92.4. Back and forth 92.5 now. On the blue line, the yellow dashed line 87.3, 87.4, 87.4, 87.3, back and forth. So, it's still showing strength. You can see the hinkies in a few seconds when I turn them on. There's the hinkies. You can see a bunch of hinky ASCII bars on the daily bar there, moving up. Lots of strength, just like we see right here. Lots of strength. And like we see right here. Not right there. Right there. Lots of strength. Buying, buying, buying. You can see our weekly's been in a buy for a while. We have the same thing going on there. The weekly is in a buy. See all those buys. And then when we go over to J4X, and we throw that up, right there, you'll see buy again there. And you can see the blue line on a weekly is 91.8, and we can see that the dashed line is at 92 even, or 92.04, 92.33, 92.38, 92.05. So it's showing a little bit more. It's trying to top out in here. It's trying to roll over, and we'll just wait and see if it closes. The blue closes underneath the dashed, and we see a red hinky, and that'll tell us that the breaking down of the trend, the weekly trend there. All right. From there, we can, if there's no questions, nobody wants to look at anything particular, we'll go over to. Where will we go to? We'll go to the euro. Let's take a look at the euro. And let's see, where's that at? 6. It's in here somewhere. 6EF right there. There's the euro. You see that euro's been marching down for a good week. What's that? 5 days in a sell, and something like 9 out of the last 10. And you could get even deeper. You can go 15. Is it 15? 15 out of the last. No, 17 out of the last 18. I'm sorry, 18 out of the last 20. 18 of the last 20 days, it's been in a sell there. And you can see the weekly's been the same way for weeks and months. Previously, it's in that sell. And let's go over and take a peek at what it looks like on J4X. SC, good morning to you. Welcome to the cyber trading pit here. No question is ever not answered. And if we don't know how to answer it, we will find the answer for you. And we are just always here, just like a trading pit of old. Just ideas flying through here. Don't be afraid that your idea may not be smart, because you never know what gem may come out of it all. So we always say that there are no stupid questions when it comes to trading and money. There are only long answers or short answers. You can see all that red there on the euro, just like you see it over here. Am I getting both of them? Yeah, as you see right here. Like that. How's that? That's better. You can see that. All that weekly sell going on in the euro. And all the pressure there. And you can see the blue line is down on J4X at 5.94, almost 6. It's at 6 there. And the slow is at 5.5. So it is trying to bottom a little bit in here. But we've been seeing that for months now. Doc, could you please talk a bit on options? Would love to talk about options. I love to talk about options. I'll start off with a couple sentences on the simplicity of it. This way, if anybody's listening that doesn't know anything about options, we'll give a good explanation of what they are. Okay, and then from there we can talk about strategies if anybody cares for it. What an option is exact, as we always say in the options world and on the trading floor. It's exactly what it's called. It's an option. It gives you an opportunity to make a decision. In this case here, there are two types of options. There's a call option and a put option. Okay? There's only two types of options. Now there's many options with strike prices and expirations and all the legalese on how they will deliver and so forth. But there are only two types of options. There's a call, C-A-L-L, and a put. Matter of fact, maybe I can even get it up on the screen here. Let's see if we can find a picture of it to describe it even more. I should put a folder together and where we can go right to it. And then we could have a physical example. Hey, okay, here we go. We got something going on right there. And we'll go like that. And so a call option, when the currency is going up in value, or the stock is going up in value, or the futures is going up in value, the call gains in value. Okay? Now, there's only two types of options. Okay? A call and a put. And so let's show you the put option. A put option does the opposite of that. So a put option does the same thing. When the stock is going down or the currency is going down, okay, the put option actually gains in value. So that's a bad tool there. Let's see if we can find a better tool, because what happens is that a put goes up in value just like the call does. When a currency or a stock goes up in value, the call gains money, the put loses money. And the same thing. If the product goes down, the put makes money. Okay, so in other words, if you have a stock or a currency going down in value, the put will gain money. Okay, it's a mirror image thing. Okay, so Robin says call is up, put is down. Exactly. Now, this is where it starts to scare people, which is no reason for it to be scary if someone will explain it to you correctly. You can buy a call and you can sell a call short. You can sell the call from, if you bought the call and you want to get out of it, you can sell it. Or you can short it. And that's where it gets a little complicated for most people, because people in general are confused by the short. Okay? Everybody knows buy low, sell high. But buy low, sell high, sell short, buy cheaper, that confuses people. Okay? And that's in everything, not only in options. All right? A lot of people go, what do you mean you can sell something you don't own? It's called being short. And the same thing with the put. You can buy a put long. In other words, you own that put, and you're betting that something's going to go down in value. Or you could sell that put without ever owning it, and you would be short. And so if it goes down, you lose money. Okay? But if it goes up, the underlying product itself, the stock or the currency goes up, the put makes, if you're short the put, it makes money. And obviously if you own the put, it loses money. And so it's basically, when you master the idea that a call gains when it goes up, then you can extrapolate about long or short. Same thing with a put. Once you're comfortable with the idea that a put makes money when something goes down in value, then you're not as confused if you understand shorting it, that you're playing the opposite side of it again. How's that, SC? Is that good enough? Does that make sense to you? Or at least you have the flavor of it, like when you walk into a kitchen or a restaurant and you smell something really good? At least you have an idea now how those two things work. Exactly. What is a strike price? Let's show you what a strike price is. Let's see if we can do this. Option chain. What a strike price is, let's see if this will show it. Free download. Let's try that. Let's see what happens there. What happens is that a strike price, let me see if I can show you a strike price. I'm going to find it and I'll show it to you, and then what I'm going to do is I'm going to show you all the parts of an option. Okay? And so for every part for every call, they're the same parts as the puts. They're mirror images. So let's find a platform and show you what strike prices are and explain what the months mean, and just the whole thing. Okay? Because you've asked a good question. Let's see. Let's do this. Free option prices. Free stock option prices. Find free stock option chains, explore and search. Okay, let's see what happens. Yahoo. All right, beginner guide to options, download the option strategies, free option trades. Let's see, option calls and puts explained. See, I want that. I just want the actual chain. We'll find it. We will find it and put it up there. We're going to find it. So, option chain example. Let's try that. Let's see, option trading explained. Free stock option chains example list. So they all want to sell you something, and that's fine. And we're going to get there, and we're going to get that thing up on there, and then I'm going to bookmark it, and then we can have further conversations during different webinars about it, and have visible things there. Let's see. Let's see if we go to the Board of Trade. They may, where we might see it too is, let's go to the largest bank in the world. The largest bank in the world is the Options Clearing Corporation, the OCC. There's a government agency also labeled it as that too, which screws things up. OCC overview. Let's see, simulator. Let's see if we can do that. We'll find it. We will find. Let's see. We will find one, and it's well worth taking a few minutes here and playing with it. Let's see. There is a margin associated with calls, puts, it. If you could explain it, please. Definitely. We're going to explain all that. I just want to get in. See, once I get the what they call the option chain up there, then I can explain each moving part of it, and that's what I want to do. So let's see if I go back to the option clearing corp, smart option strategy, option charts. See, they just want to. I just want to show you. Let's see. Option clearing. Let's go back to option clearing corporation again. OCC. Option clearing corp. OCC. Let's spell it out. Option clearing corp. This is well worth taking the time to figure out. Let's see. Option beat trade. It's so interesting that we ask for the option trade. Let's go back to that. I found the website once. Let's find it again. Option Clearing Corp. twtrader.com. No, I want the option clearing. OCC. Let's see if this does it. Markets. Alright, let's see what one of these things does. Option chain. Let's see. See if it'll do on the S&Ps. Boy, they really try to move you over to somebody, don't they? End of the month, delayed quotes. There we go. Maybe that'll do it. Alright, now that's there. Options. Okay, here we go. Alright now. Alright, so let me bookmark this too in trading so that we can go to it again when we need to. Trading. Bookmark bar. Let's just put it on the bookmark bar. Alright, and where will it be? No, that's not it. Alright, so let's do it again. We're going to put it science. Either way, alright, I'm not going to get rid of it, but here's the option chain, okay? Now what happens is that we're going to be looking at the S&P 500, okay? And over here, let's see where the strike prices are. Deltas, they're giving us all the fancy stuff. Let's see. Standard. And then, alright, so this is, okay, so what they have here is, there's the 29, and that's not the strike. See, they're not showing us, they're giving us all the Greeks, but they're not giving us the strikes. And that's what we want. We want the strikes. So we're going to get there. We'll find it. Options, again. Let's go back to options. Let's see what the dashboard, that's the dashboard. So, there. Okay, now, markets, equities, trading. Boy, this, and let me explain one more thing, SC. Let's see, what else is strike? Margin. One of the reasons why it's so complicated to find it on the web is they really like to hide. Robin will confess to that. This is the way that the professionals are able to gobble up easy things by hiding all the data. They really do. And the Securities Exchange side is okay, but Chicago and the Commodity Futures Trading Commission is hideous, just hideous when it comes to trading options in those markets. They really abuse the investor enormously, just enormously. I wonder if the CME will show strike prices. All we want. Okay, here we go. Let's see if we do this. Let's see if we can find. Boy, they're giving us so much. Okay. No data. All right, so let's do this. Let's find SPY. See, they've given us so much to choose from. All right, here we go. Let's see if this will do it. Now, let's just see if we can do any of these. I'm just going to click on somebody. Somebody's got to let me in. Puts no data. What do you mean no data? No symbol. What do you mean no symbol? And there's you can see it right there. It says expires strike price volume. They make it so hard. They really make it so hard just to make it complicated when it's not complicated. All right, we're going to find a way to get into this before this webinar is over with. It even shows the margin. Let's see, option. Why can't we get into one of these? Why can't we just click I agree? Okay, I'm going to give it an I agree. Okay, so here we go. Here we go. Okay, so right now, we're going to highlight this. This is the S&P, all right? What it's doing right there is it's showing us the volume. You're going to see this in a few seconds. Okay. And at the same time, it's showing you the strike price. The strike price is 4,320. Let's find something simple like SPY. Let's see. I would love so that I could put SPY in and let it put the strike price in. It's very close to doing that for me. So we'll find this. Just hang in there, SC. Hang in there. Because once we get across this, we should be all right. They got calls and puts. So we should be able to highlight something or put something in and search for it. Is there a search? See, they won't even put a spot. CBO market volume. Let's see. Rule book. Tech notice, hours, market contracts. See, they want information. All right, so let's do it. I don't care. Now I don't want to see. They're trying to connect me to somebody. That's all they're trying to do. All I want is strike prices, general, just strike prices of a product. Let's see. Market data service, I don't care about. Regulation, I don't care about. Trading, I don't care about. Overview, I don't care about. I want to be able to look at the simple option chain. All right, so what's this say? The current most actively traded options on the CBOE options. All right, well, show us one of them. See, they're just showing the individuals from yesterday. Now, all right, here's the VIX. This is a little bit easier for you to understand, okay? There's the VIX. The VIX itself is trading at the strike. Let's see what the price is. Let's find the VIX. Let's put it up on our screen. Right there, right there. Okay, and let's put the VIX in there, so you'll be able to understand all this together. There's VIX. As you can see, didn't mean to do that, but that's all right. We'll start again. All right, so that and that again, back to normal. There you can see that the product is trading at 18. Okay, you see that right now it's a little above 18. Let's just emphasize that. So you can see today it's at 1831 as we speak. Okay. All right, let's go back. Now, over here on the option chain, you can see that the VIX, it says strike expires October 18th of 23. That's the expiration of the strike and the option itself. Right here, Let's see if they let me highlight it. And we're going to work on finding a good options chain. It's the 23 call, which is odd as far as I'm concerned. There's 2,000 of them traded, but we know it's at $18. And so what they're saying is that people were trading the 18 option, and it was the call, because this is, see right here, it says call there. So it was trading the call. Now what the strike price is, okay, and when I get an option chain up there, it'll explain it more, and then it'll be much easier. Matter of fact, up top they're showing us the November 15 call at the 21 strike price, which is the price that it can be exercised. They're not showing us the price of the premium. They're so deceptive. It's ridiculous. The level of deception in the market is so ridiculous. It tells you need to learn about this stuff, because a lot of money's made in it. That's what it tells you. If the government agencies and the NGOs, non-government agencies, the exchanges who are ruled by the government, won't give you honest prices and easy access, it shows you how much money is being made. They want to keep it in their hands and out of your hands. That's what it comes down to. So now, what a strike price is, and I'm going to highlight the VIX again. In this case here, we're looking at the call in the VIX November 15, 23. What that means is it expires on November 15th. That's what the expires is. Now, strike price is what you can exercise it for. So in other words, if you sell that call short, and as you see on the chart over here, let's show you again. As you see on the chart over here, let's put it right underneath there. It's trading at 18. So is the 21 call, in the money, have more value? No, it has less value. Obviously, the 20 call has more value. The 19 call has even more value. Obviously, the 18 call has even more value. The 17, even more value. But the 21 call has less value. And what is that value? Something on the screen that doesn't reflect. It's called a premium. That's what you buy the option for. You buy and sell options, the call option or the put option, and it's called a premium. That's what you're trading, the premium. That's the price of the option. Now, let's go back to this all over again, because I want to find the option chain. When you see an option chain where you see the November 15-21 option call and the 20 call and the 19 call, and you see the premium, why they're showing us volume, I have no idea, except for the fact that they're willing to show you most active, but they're not willing to give you all the value. It must be in here somewhere. They'll just hide it and do their best to not, contact, market data service. See, they want to send us to somebody. They're an exchange. They should give this data out. Even if it's delayed, it should be given out easily. But they hide it. And I've done this throughout the years, complained about that. The criminality of the government agencies to allow this to go on. Black pools and hide data. And you have, to get real data, you have to go through the broker. Okay, fine. How about delayed data? Why can't we see delayed data? Why do they hide delayed data? I had to take a sip of the tea because I'm frustrated. All right, now, so there are, and unfortunately this is not very good, and this is from the Chicago Board of Exchange, the largest exchange in the world of options. What there is there's an expiration of the option. The strike price tells you the delivery. Let's show you an example of it again. Matter of fact, there you go. They have the, here's an in the money. No, that's not in the money. Here, this is a little bit closer. There's a November call there. That's the 21 call. Now, an option chain will show you the premium, the bid and the offer. That's what we trade, okay? So the strike price is the exercise. So in other words, you're buying a November 15 call. I'm sorry, you're buying a November 21 call or a November 15 21 strike price, okay? So you're buying that option and there's a bid and an offer, and that bid and offer is the premium of the option. Okay? I wonder if Ducascopy has option chains. They have binaries. I'm not sure if they have option chains. They probably just have the binary premium. So what we will do after this webinar, if I don't find it during this webinar, I will find somewhere where it will give us an option chain. And then we can look tomorrow and understand the physical mechanics. But I'm going to explain it to you now instead. And let's see if we can do this. Let's do this. Let's go to Yahoo Finance and see if they have an option chain. Market list, option chain. Okay, it looks like something's popped up here. There you go. We got something here. Now they're giving us matching options. Okay, here we go. We got some companies here. What is that? Tesla, TLR. Let's see what. Let's click on one of these and see if we can get some information. In this case here, let's do Tesla. Let's see what they do here. Open bid Tesla October. They're giving us the individual option. Let's see. They're just giving it now. Let me go back because they did show bids and offers. Here's an example of it. Let's light this up. Here's the Tesla right there. Oh, let's try that again. Let's see if we can light this up again. Here we go, like this. There we go. Okay. Now, there's the name of the product underlining, be it Deutsche Bank or Euro, or in this case here it's Tesla. Here they say it's the name, okay, or the expiration. So we go and look at the name, and it says it's the Tesla October 23 put. And it's the 2,500. I guess it's the 2,500. Is the stock actually trading at that? I don't think so. Now that says the strike is 250. That doesn't make any TLSA. That doesn't make any sense. All right. You can see over here. I'm going to highlight this whole row. It won't let me do it. Okay. Right here, you can see that's the bid and offer. They're showing no quotes at the moment. Okay. They're just showing you volume, which seems so disingenuous, but that's besides the point. They're trying to tell you the change of percentage, the price intraday, 160. That was at one point. I guess that's where it might have settled at $1.60. And so the strike price is where you can exercise the product. And so when you need to have a strike price, so you know where you can exercise it. You need to know when it's going to expire. That's the name. In this case here, the October 18 call. And then they'll go even further. The October 18, like in VIX, the October 18 20 call, or the 19 call, or the 21 call. Okay? So the strike price itself is the expiration. The premium, again, I'm going to repeat myself, is the bid and offer. So the premium shows you where the bid is and where the offer is. And when it's liquid, like say an Apple computer, that stock, their bid and offers are about as tight as any option in the world because it's the number one option traded product in stocks. And so SPY or SPX or the ESs, the S&P 500 is the most liquid index option in the world. And at the Board of Trade, the SPY is a equity. And over at the Chicago Mercantile Exchange, it is a futures contract, which you have to be very careful trading future options because they're almost criminal with the way they allow the bid and offers to shift. Sometimes, you can't do market orders over there. because they're so criminal that if you do a market order, you may get your head handed to you. Okay, so the product we have a strike. Yes, predetermined. Correct. Yep, exactly. So options have every call option and every put option has identical strike. So in other words, if there's a 18 call, there's a 18 put, and the premium of the option, or what you will trade it for, is not the strike price. The strike price tells you what price it can be exercised or delivered, or delivered or exercised. We always use those two words, and it means the same thing. And so the premium, which is being hidden relatively well here on the Yahoo Finance, we will find a place and come back tomorrow, and we will find. I'll be able to show you the option chains, and then you'll see the prices of the bids and offers, and you'll be like, oh, this makes a lot more sense. And but yes, a strike price is where it is the price that it gets exercised at. The name or the month or expiration is a date. It's going to be on the 18th of October at 9:30 in the morning. If it's a futures contract, Eastern Standard. If it's a equity, chances are it's going to be expiring at 4 o'clock Eastern Standard Time, Friday afternoon. They always like to do it on Fridays. Now, there's a lot of options. There is a group of stocks that have daily option expirations, like or every 2 days operations. And so, in other words, you can do dailies, you can do 2 day, you can do 3 day, you can do 5 day. You could do 500 days, and they have a premium to each one of them. A bid and an offer, and that is defined, and it works like a bond. The premium actually works like a bond. It slowly shrinks down to the intrinsic value itself. Now, is that making some sense there, SC? Are we getting there with you? And what we're going to do is we're going to find a much better example tomorrow of the option chain. And then when we do, it'll open the doorway for you to see it visually and where it will make more sense. I'm just waiting for you to. Yep. Good. And what we're going to do is we're going to find more. We're going to find better examples tomorrow, and and we'll be able to make more sense, and maybe we'll have a 15-minute option spot every day, and we'll go to we'll look at options, and we'll have a conversation about them. We'll combine that with the currency trading, and then we can talk about binaries and strategies and do that. We've talked about doing that a long time, and what's happened is that we've never really gotten there. But if we get enough people that would care, then basically we could get that going. That would be really cool. Could you show the dailies AMD, Google, and Apple? Most definitely. All right, let's go there. And SC, thank you for starting this. Tomorrow we will have a better example, way better. I'm going to find it through the day today. Let's minimize that. Let's bring that up. Now let's take a look at what was the first one? AMD. That's fine. There's AMD. You can see that there. It's trying to be a little firmer here today, it looks like. Is that the 27th? I think that's... I'm not sure if that's given a pre-market or not. Let's go over here and see what the pre-market looks like. And let's find AMD. There's AMD. Now here, let's see, is that I think that's reflecting, yes, that's reflecting this morning's market. Let's get it up on the screen here for you. And as you can see here, it closed in the daily buy yesterday, right there. And we got, and it's trying to climb a little bit more today. You can see it's been in a weekly sell now since up here in, what's that, the 116 area. And it's zigzagged its way down to the low of 3 days ago of the 94 area. So it dropped 16, 20, about 20 some odd dollars. Once we went into the weekly sell, it found its way to work down. And then the dailies confirmed, you take the shorts here, that was one, this was one, this was one, this was one, they were winners. And you don't touch the longs, you just make sure you're not short when it goes green, that's all. You close out or flatten out or do something. And in option trading, you can close out. You don't have to take all the option off. You can turn it into a binary. That's what's fun about all that, is that you can use different tools to be in positions and then hold out for something to move in your direction again. Now let's find Google. Let's see. I guess I go like this. I close this. Let's find Google and Apple. We do have charts on them on another page right here. Let's open that up. And let's find it over here too at the same time. As we're waiting for that. Where's Mr. Mouse? We go like that. Here is Apple. Right there. There's Apple. As you can see, it went into the sell yesterday. And let's put it up on here today. There's Tesla. And so it's up a little bit higher this morning. You can see that there. But it's in a sell. It's been in a sell since back in here. Let's grab one of these. Let's put a sell line in there for you to see that. So it's been in the sell since right here. And it kind of drifted around on the downside. It's in the weekly sell since back in here. It's been in the weekly sell since the 190-ish area, 192, 193, something like that. 192.58 it says, but basically there. And it was in a daily sell before that. And so it was a real winner chicken dinner when it closed in that, because look at it, it got crushed from the 192 over a 3-day period to 177. So what's that, 13? That's like $15. That's not bad at all. And that, so there is let's see, let's make sure. Oh, you can't see that. Yeah, let's fix this. There you go. You can see that right there now. So there's the weekly sell, and it it rolled over really well and so forth. And then it's still in that weekly sell. It's trying to lift up again, as you can see some of our algorithms, just like it did here. The fast went into a buy with the daily. And you had that nice little run. That's why we do that. You watch the dailies and the weeklies combined together. And then we're still in a weekly sell. It's breaking down again, and we go into a daily sell. And look at that. You get the daily sell at 182.91. Basically, let's call it 183. And by the next day, it's at 173.54. So it's a nice little drop there. It's a $9 drop. So there's Apple, and you can see the pressure on it, and it's trying to lift a little bit today. That's where that's at. The high low and everything is wrong on this because it's doing a pre-market thing. Now let's look at Google. There's Google L. It's been in a daily sell since this spot there. Let's find a sell for it. Let's put a sell in there. I think it's in a weekly buy. It's just going into the weekly sell. Oop, cancel. You can see here it's flirting as we speak with the weekly sell. Um, it's been in this daily sell now 6 days. It's up a little bit today. Interesting that it's playing with the weekly. Markets do seem to be kind of, like I said, the government policies are really controlling the markets at this point. And, it's not changing much. Let's put it that way. All right. Let me see who's texting me again. So, how's that? That help out with the stock indices? Put watchdogs on tomorrow at night. It's fun. Or cost. Coast. Cost. What's cost? COAST? Cost. There we are. There we go. No money. Okay. So, how's that? Did that work out all right, Janos? And SC, we will have better examples tomorrow. I'm going to bookmark some that we can get to. We're going to find some and straighten this out so that this, again, government policies, they allow the options market to be hidden. They force the options market to be hidden. And they try to hide everything else. Yeah, no field to get involved today. Exactly. They're going to try to. We're seeing a little strength here today, but I heard a money manager today. He was one of the older, stronger, smarter ones that I know, and he basically said that hit the gym. I agree with you there. He basically said that the markets are pricing in interest rate cuts in January and February and March, and we all know they're not. They're not gonna lower rates. Maybe they'll lower those rates in the second half of the year next year, but they're not going to lower the rates, coming into the new year. And so, markets are acting very strange because of that stuff. So that's really what it comes down to at this point. Why don't we do a quick run through all the products, and then we'll get out of here, because I'd like to, and if anybody sees or wants to see something, just let me know, and we'll go through that too. So let's jump over to, let's do this. Let's go over to the currencies, and we'll just go through each one of them real quick to show you where the weekly and daily is at the moment. So there's the euro, and as you can see there, the euro is at the lows of the day and 8 or 9 month lows. You can see we've been in a weekly sell now since back in where is that? August, and we're getting ready to go into October. British pound, same situation, and we've been in a weekly sell there since the beginning. Oh, you know what? That was July. So we've been in a weekly sell in euro since July, and here we are in same thing in middle of August. It went into a weekly sell for the British pound against the dollar. You can see we've been in a daily sell for a bunch of days. When it comes to the Swiss, I saw a great story this morning. I was going to talk about it. We'll talk about it tomorrow. It compares the Swiss against the Japanese yen and the policies of both central banks. How many months ago was I on? I was on that rampage 10 months ago about it, and 8 months ago, and 6 months ago. So somebody wrote a story about it finally. That's pretty cool. So we'll put that up tomorrow. That was really cool. I was kind of excited about that when I saw it. That was going to be part of my theme today. You can see here they're making highs here. There are 5 full handles now off the low. And we've been in a weekly buy since the middle of August there also. Going over to the yen. The yen is up in the 149s, We've talked about that. Same thing. early August weekly buy back in the 42ish area. Here we are at the 149ish area. We've been in a daily buy for the whole month. Two more days, and the daily has been in a daily buy for the whole month of September. Over on we jumped to Turkish lira. They had this. I see that spike in a few places. Let me just put it up on J4X too. I saw that spike. Let's see if J4X picks up on that spike. When J4X does it, I know it's real. Right there. No, not there. Not there. Right there. Let's change that again. Right there. And so there it is right there. It got up 28 and change, is it? Over here, they're reflecting 29 and change. And I have another on my my new platform that I'm developing. Let's see, I'll put it in a second. It's reflecting it also, which is surprising because it's two different data feeds. So over here in the States, they're reflecting that. From there, we go over to the South African Rand. And the Rand, you can see it's turning up, and that's obviously hurting the metals complex, that's for sure. And we'll go take a look at that for a second. Let's see. And so there is the South African Rand. Let's put gold up on J4X, and you'll see the action we're getting out of that. With the Rand going up and losing against the dollar, we're seeing pressure on that. Look at that slide the last couple of days, going from the 1940ish area. Well, there it says there 1947, and here it's trading at 1889. So we're seeing the pressure on that. Let's take a look at silver. We'll put that over here. No, we won't put it there. We'll put that there like that. There you go. Now let's go find silver. There's silver. Silver doing the same thing, rolling over. South African Rand losing against the dollar, and metals get hit. Copper, the China intuitive, I guess you could say, is going down. And then we see platinum, just another day in the sell, 4 days in a row. So we're seeing all those pressures, and you can see we're trying to get into a weekly sell too at the same time. Over on the natural gas, crude oil is up to 92.39. And we're seeing, it's been in a daily buy since the last week of September, I guess it is, or last week of August. And so you can see it's gone from the 85 area to the 92. It's not a big move, That week though was interesting. It went into the daily buy right there at 78 on that last week of September of August. And then it closed that week into the following week they closed in the weekly buy. And it's been a real rock and roll move on the upside there. You can see the arbitrage, 88.73 versus 92.46. It's heading for $4. It's $3.50 now, the premium. It's getting pretty hot. Let's take a look at, let's see, we're looking at the energy. So let's go look at natural gas. There's natural gas. You can see natural gas is trying to roll over still. It's been a daily sell for 4 or 5 days, and the weekly's still in the sell right there. And what else we got going on? I guess we should call it quits. Let me just show you the bond market. Bond market's been in the sell for a couple of weeks now, and interest rates have been rising. That's how it works. When price goes down, interest rates rise. All right, traders. And SC, we will find an options chain and all the option parts, and we'll be able to explain them to you tomorrow. So this is Doc from North America saying good option trading to all. And happy trails to you until we meet again, which will be tomorrow, Thursday. Happy trails to you, to all our trading friends. Later, traders.